I will quickly share my screen so that we continue from where we stopped. Okay, so please, I told you guys in the previous class, if you have not been taking this class serious, okay, risk management is something you don't want to joke with. Okay, you don't want to joke with it. I told you guys you are going to be doing a challenge, and that challenge is where I will know if you actually grab this risk management stuff I'm sharing. Because if we are buying a pro firm and we want to do a challenge, if you fail your own, I'm not saying you cannot fail a pro firm. Okay, even me, I can even fail pro firms without passing like 2 3 or so. I've not tried it before anyways. Okay, but the reason, if you fail, depending on how you fail, okay, if you fail because you break the rule in terms of you go against the daily drawdown, or you go against the maximum drawdown, that's not you are in fact is punishable by law in this class, as long as you have passed through this mentorship program. Okay, it's punishable by law. But if it's manipulations, if it's slippage, or you hit your stop loss several times, or anything happen, just the normal trading stuff, okay, you are good to go. But if you break the rules, especially those drawdown rules, you are looking for a trouble, right? So, and you can, when we are trading together, if a time permits, there is nothing that will make you do that mistake, unless you decided to go and do another thing outside what we are doing. Okay, so I'll just simply share. I'll continue from where I stopped yesterday. Like, we are going for from currency pair, we now move back to indices, okay, to finish up the position size calculation or anything like that, the pip value, how to calculate pips and all that. Okay, so I will just pull up my trading view. Okay, this is my trading view. So I'm going to use this trade. I dropped a trade on GBP JPY yesterday, and the trade is still running fine. It could the trade move almost hitting our TP yesterday, but we couldn't hit TP. But sorry, don't actually look at this trade with that our that is, don't look at this trade as our setup, right? I'm just backtesting a strategy. Okay, I'm just backtesting a strategy. So, but if you look here, we are having something like our setup already. Okay, but you cannot enter. Remember, you cannot enter this trade with our first entry. Our first entry using our A1 setup, you cannot enter this trade. Remember, because if you look here, the price did not break structure towards the downside. You can see this level here. So the price that swept liquidity above could not break this. Okay, so you are not making entry here. So rather we want to wait for the 50% retracement, right, before you start thinking of entry. The price will retrace 50%, then pull back before you sell, right? So where we have something like that is here. So if you look here, we have a sweep of liquidity. I told you if one candle should close above, okay, if one candle should close above here, this is still valid, right? So the price bounced back to our zone. You can see our order block here. So this is also our setup, you should know. So we are to enter a trade right here, short position, entry here, CP should be down here. Okay, now stop loss somewhere here. I didn't enter this trade because I'm already on a trade. Okay, I'm already on a trade on GJ GBP JPY. So I don't want to like open multiple trades again, because I'm already on that trade since yesterday. So I cannot enter this trade again. But you guys know that this is our setup, right? So if this is our setup and we are targeting this level, and now our stop loss is just few pips above. Okay, we have our sweep of liquidity, retracement, which is more than 50%, price pull back again to our other block, which is this last opposite candle, and we are selling. So now let's see if $100 account holder who is risking 1% is going to be taking this trade. I just want to use this for example. Okay, so if you have $100 account and you want to take this trade, I want you to know the reason why you can see a very good setup but you cannot take the trade. So your entry is at 1.24750, right? Then how much are you risking, or how many pips are you risking? You can see here 15 pips. Okay, 15.8 pips is what you are risking, and you are targeting 51.7 pips. Okay, this is 1:3. Okay, right here. Okay, you are targeting 51 pips and you are risking about 15 pips. So now you want to make sure that you are not risking more than 1% of your account. For instance, okay, let's say 2%, and 2% of $100 is $2, right? So let's go and check which lot size are we going to use. Okay, which lot size are you going to use in order not to risk more than 2% or 1% of our account. Okay, so what we need to do is just take note of the risk, okay, in pips, which is 15 pips. Then take note of the reward and your entry. So we go to the website that we used. Okay, we just simply go to the website here. Okay, remember this website yesterday, nforex.com. You go to position size and all that. So we are going to be using account size is going to be $100. $100. Then how much are we going to be risking? We are risking, because $100 is small, so we are risking 2%. If you swap it in money, it's going to be 2% of $100. It shouldn't be this. Let me check. I think this is $100. Are they doing okay, let me delete this. I think I have to refresh this page so that we won't get any wrong values, anything like that. Okay, it's taking time. So we go to forex tools, scroll down a bit. Hope you guys are following. We're going to peep.
Yes, sir.
Okay. So position size, calculator. I want the account to be 100. I don't know. It seems like 6,000 is the listing, but let me see. We'll be risking 2%. Let me swap it. Swap to money. Why is it not happening? Account is in USD. Trading GBP USD here. Okay, so now how many pips stop loss? We are risking 15 pips, 15.8 pips stop loss. Okay, we click on calculate. So now for us to risk $2, you can see it here, the amount we are risking is $2. So for me to risk $2 on this trade, I have to use 0.013 lot size. Okay, 0.013 lot size. That is the lot size I'm going to be using to place a trade here. Okay, to place a trade here, I have to use 0.013 lot size. Okay, so if your broker accept that, you can place a trade. But if it's beyond or is lower than the minimum lot size, that means you're not going to be taking the trade, right? So even if you have seen your setup, okay, but the risk is higher, okay, it's not actually allowing you to take the trade, you have to skip this particular trade. So even if you have $100 account, you need to skip this trade. That's the truth. Okay, So that's exactly how to do this calculation. Very simple. Put in the amount, the amount of money you have in your account. So let's say you are trading a $6,000 account or $5,000 account, maybe Profem account. You come back here, you just put in the amount you are the how much you have in your account, which is, let's say, $5,000 account. Okay, now you want to be risking 0.5. Okay, that's what I recommend for when you are starting. Okay, you start with 0.5. We are trading GBP USD, so, and we are risking 15 point something. Okay, so you want to know how many lot size you are going to be using on this Profem account, for instance. Okay, so on this account we are going to be using 0.158. okay, we are going to be using 0.158 lot size. Okay, and this is exactly the amount you are going to be risking, which is $25. So there's nothing that will make you lose more than $25. Okay, and we are trading according to the opportunity we have here. This is 1:3. Okay, so 3.2 something 27. So we are going to be targeting about $75 on this trade. Okay, because we are risking 25 and we are using one trade, which is 25 times 3 is going to be giving us 75. So we are going to be getting about $76 or $77 on this trade, because we have 3.27. okay, so on this trade. So $5,000 account, let's say you hit your TP and you make 70 something dollars, you know that you are close to passing the account already, the first step or anything like that. So, but that's by the way, because we are not here to discuss Profem. Why I'm using all this Profem as an example is because they set a lot of rules. They have a lot of rules, which is something you can easily keep if you understand risk management. If you understand risk management, it will be difficult for you to break the rules. You can only lose the account because maybe your strategies decided to fail at that particular point in time. Maybe you hit a lot of stop losses. Okay, or you are making wrong entries. But based on risk, drawdown, maybe maximum drawdown or daily drawdown, or all those their rules, you can't break it if you understand risk management. Okay, so that's the reason why this particular class is important. So when you are trading a Profem, the most important thing is you understanding risk management. And if you understand that, then with a good strategy, it will be more easier for you to pass. All right, so let's do one more. Maybe we go to that GJ trade. This is the trade yesterday. It actually wanted to hit our TP but couldn't hit our TP. So if you look this trade right now, you know it's our setup. I don't need to start wasting time here. You can see this super liquidity, you see everything movement. If I use my Fibonacci, is already 50. Is 50 from this move. Okay, from this move, that swept liquidity is 50%. Then I use my Fibonacci, sorry, my tool to draw this. You already know our other block, the price push back to the other block, which is here. I made my entry, the price push all the way to this level, few pips before our TP, the price started to reverse, because this is 1:3 point, that is 1:4 almost here. So we actually hit about 1:3 point something. Okay, but it was in the night. The price was consolidating all this while when I made my entry, so I couldn't, like, I have to allow the trade to just go. So in the night I was not active, the price just did it thing, and that's all. I couldn't take the trade, I couldn't close the trade, because if I'm watching this trade, I'm definitely closing it here at 1:3. And one of the reasons why I could have closed this trade is here. You can see here, this is also our TP level, so but I was not around, so I just have to allow the trade to play out, because I still believe the price can still push all the way to the last TP here. And why I set my TP here, if you might be asking, because this is supposed to be my TP, but I actually extended the TP down to this level because I'm seeing this fair value gap here, I'm seeing this imbalance here. So I was thinking or believing or hoping that the price is going to correct this imbalance right here, okay, before maybe reversing or anything like that. But rather the price reacted to our proper TP level, which is still okay and fine. So I'm still hoping that the price is pushing towards the downside. So let's say you want to take this trade. Okay, yesterday, before I even entered the trade, I have to do my calculation. I'm risking about 30 pips here. Okay, and I'm targeting 126 pips on this trade. Okay, So in this 30 pips, I need to check. Let's say I have $5,000 account, okay, and let's say it's a pro firm account also. Now, and this is 30 pips stop loss. Which loss size am I going to use to make my entry? These are the calculations you do, and it's very simple. It's not like you're going to take all the time. So you come here, we still have our $5,000 right there. So here now you change it to GJ, which is this one, GBP JPY, and we are risking about 30 pips here. You then type 30 pips. We are still going for 0.5, okay. Then let's see, you can just calculate, sorry, okay, the price, okay. I have to enter the price of this. Let's see the current price yesterday. Our entry is 19. Let me confirm that. What is this? Sorry, I'll bring this thing up with it. My entry is 192.635. 192.635. 192.635. If I'm not mistaken, that's the current price there. So I'm still going to be risking 25 pips. The losses I'm going to use is 0.161. Okay, I'm going to be using 0.161. If you use anything more than this, or lower than this, or less than this, you are doing the wrong thing. So once you go to your MT5 or MT4, anything you are using, just this is your lot size. Place the trade, set your stop loss where it's supposed to be, then set your TP where it's supposed to be, and you are not risking more than $25. The only thing you have to also understand is that sometimes, based on your broker, the spread, anything might make you risk a little bit more. But now, if you are now, let's say this is 30 pips, they might add maybe 2 pips, 4 pips, 5 pips to your risk already. Okay, so you already know that if you want to place a trade now, you're expecting maybe $26-27 or more than that, but it shouldn't be exceed 28-29. Okay, if your broker is if they are using a good broker, if the pro firm is using a good broker, you shouldn't risk, they shouldn't add more than 5 pips to you. Okay, so but it's fine. Even if with that, as long as you are managing your risk well, you are still good. Okay, sorry about this, you are still good. So that's exactly for risk management. Okay, I hope this is clear and it's simple. So let me go back. The website is, you can see from here, nforex.com. okay, nforex.com. Just when you get to the website, you simply click on forex tools. From these forex tools, you go to position size calculator. Okay, you still have pip calculator right there, pivot point calculator, pip value calculator, Fibonacci calculator, those things. But this is the one we are using. You can use risk reward forex calculator, anyone you want, but this is the one for when you want to know the loss size you want to use. Okay, you want to make sure you're not making mistakes. This for me this is the most important one. All right, so this is for currency pair. So let's say you are trading indices, like the setup we had last time in our last class. Let me use it as an example. What's happening is my network is slow. Okay, this is the trade I dropped in a group yesterday. I was thinking the price is going to come back to this fair value gap. It's 5 minutes fair value gap anyway. The thing I taught you guys the other day, okay, the previous class, I taught you about imbalances, how the price will always go for imbalance and liquidity zone. So I know that if the price should push back to this my imbalance here, we are heading to this fair value gap up here and our liquidity zone up here. So the price did exactly that. The only problem is that the price couldn't put it in, trigger this trade in before. So you had another one here down here, illiquidity, the price reverses again, heading towards this imbalance right here, and also the liquidity zone below here. So but this is not our strategy. I want to just waiting for this one to load so that I can share this, because we speculated this trade the previous class. I think I saved the trade as EG, go to layouts, EG in VS10, and I hope you guys will remember this trade. VS10, we are waiting for the price to retrace back. If you remember correctly, these are strategies of liquidity, price pushed, make 50% retracement. So we are hoping that this one gets to this zone. Okay, if you look here, we couldn't get our A1 entry, that is the second A1 entry, but if we entered with the first entry, if you are following this class, you already know what I'm talking about. So we're supposed to make entry here with A1, that is the first entry. Remember I said with A1 you can make 2 entries. So the first entry is valid. The reason is because there was a break of structure before the sweep of liquidity. So I said once you have a break of structure before sweep of liquidity, you can make the first entry. And this is exactly the reason why that first entry is very important, because you can see right here the price couldn't come back. You can see the price is very close to our fair value gap, but the price couldn't get to the fair value gap and start dropping. So if you have made entry here already, you are not going to be bothered about the price not hitting, triggering the second entry in, so you'll still make money. But because of I think during the mentorship we couldn't, the price has already made the move down here and it's retracing back. That's the reason why we are waiting for the price to retrace back to this zone. If you remember yesterday, day before yesterday, yeah. So but unfortunately the price couldn't get to the zone again and start dropping massively towards the downside. So now on this trade, let's say you want to make your entry and you are making entry from fair value gap. Okay, now you're making entry from fair value gap, your stop loss a little bit above, few pips above that's high. So now, and our TP normal is supposed to be here, right? So this is like 1:3 point something. Now if you look here, how many pips are you risking on this trade? You can see we are risking about 14.5 pips here. You can see it's up here. Then we are targeting about 49 pips down here. Okay, that's our target. Now how do we know the amount of money? If you have like let's say you are trading your account and you want to risk 1%, how do we know exactly the amount you are risking, so that we will be able to check if this is equivalent to the percentage you want to risk? Okay, so we go back and we are using a tool here, because this is indices, synthetic indices for that matter. You come here, you look for the risk pip calculator, which is this one, the risk pip calculator right here. So now let's have it load. So after loading, you have this first link. You click on this pip calculator right here. It's going to take you to their platform. Okay, so this is their pip calculator where you can actually calculate those things. So you come here, you choose whether you're trading financial or you're trading synthetic. So we are trading synthetic, then you choose the symbol you want to trade, and that is VS10, right? So we look for VS10, we scroll down looking for VS10, right? So this is VS10, you select VS10. So now you have selected VS10 volume. You need to put in the lot size you want to use. Let's say we want to use 0.5. I think that's the lowest. Lowest is 0.1 or so. Now how many pips are you risking? We are risking, I think that's 14.5 pips, 14.5, sorry, 5 pips. That's what we are risking. So you want to calculate how much money are we? Someone is knocking on the door. A minute, let me admit that person. Turn off your mic once you are in. So now we are talking about how much money are we risking on this trade. So I will just click on calculate. So you can see I'm risking just $7.25 if I'm using 0.5. So if you have, let's say, $100 account and you are risking 2%, okay, you are risking 2%, you can see you have exceeded the percentage of your account. You are risking more than the the your percentage limit, okay, because you are risking just 2%. So let's say that the lowest loss size is 0.1, and you calculate. So now you can see you are within your zone, okay, you are within your zone. So you can equally put 0.15 and you calculate. So this is when you have your risk in check. But even though it exceeds your risk, you can reduce it from here. So from here you can, twist things and actually get to the exact lot size you need to use. So for you to trade this and for you to risk only 2% of your $100 account, you can only use this lot size 0.14. So let's say they are the lowest loss size, just like volatility 25, the lowest loss size is 0.5. So on this trade, you cannot use 0.14 for that setup, right? Because you can't trade less than the minimum lot size, right? So for the fact you have seen the setup, okay, it's not a guarantee that you are taking the trade. Your risk can stop you from taking trades. Once your risk is high, the risk you are taking on the trade is higher than the percentage you are willing to risk, you have to skip that trade and wait for the next setup. I don't know whether you're getting this. The moment you be able to learn this and you are disciplined and you stick to these things, tell me how you're going to blow your account. Tell me how you will hear people talking about blowing accounts. Someone like me, I lose money. I can even lose back to back 3 times, 4 times, 5 times. But what I know definitely that people like me can do is blow accounts, because I'm too conservative to blow accounts. It's not possible. Unless something happened and maybe by mistake, like I think there was a day I traded. I think I posted it in the Telegram group where I made a mistake of placing a trade on VS. I think VS 25. I placed a trade there with I think 400, and that is 500 lot size. It was a mistake anyways, and that account was about, I think that account is a $500 account or so. The first, even from the spread, I'm already losing $100. The price fly again up, and I was losing about almost the account, almost 90% of the account, because I know my account went negative $400 or so that day. But at the end of the day, it recovered. And once it's recovered, so quick one, I have to say this. Thank God I remember this. Now, when you enter a trade mistakenly, maybe you made a mistake with loss size, or you made a mistake with entry, you made a mistake with once it's a mistake. Once you enter a trade with a mistake, then the price go against you. If the price is within your risk, okay, if the drawdown is within your risk, let's say you are risking 5% of your account, and the drawdown is between 4% or 5%, okay, and you know that you made that trade, maybe the lot size you use is wrong, or you made a wrong entry, or you entered a trade, maybe you entered on a wrong pair, okay, or wrong indices. Maybe you want to place a trade on 25 and you're placing a trade on 10. When you notice that, simply close that trade. Not even say, okay, maybe you start trying your luck, start checking if it will now work in your favor. You don't even need to check the chart to know whether it will work. Just close it, because you have made the mistake. Close the loss and go and place the right trade where you're supposed to be. Because that day is it's good I remember this. That day, some people will be so greedy that, okay, now the price, after going against me, now push back again, enter into profit. I think this is the right time for me to double this account. This is the right time for me to flip this account to $2,000. You now allow the trade. Maybe you are now making about $100 in profit, $200. You know they are using the wrong lot size, but because you are greedy, you now think that this is opportunity for me. I'm taking advantage of this mistake. I want to hammer. I want to flip my account. I dare you, when you try these things, you will never survive it. You will never survive it. You will cry and you beg the price to come back to your entry, and the price will never come back to your entry. So once you make that mistake and the drawdown is within your risk, close the trade and make the right entry. Then if the drawdown is not within your risk, you can actually wait a little bit for a retracement, because the price cannot just go all the way up and finish your account. It is possible anyways, but it's rare. Once the price comes back to your entry, don't even think of making money from that mistake. Close your trade and make the right entry. So I think I hope you understand this. So if you come here, you can see everything is simple. They stated everything here. Synthetic. If you want to trade financial, which is currency pairs on the reef, you can click here. You symbol is the indices you are trading. Volume is your lot size, where you actually try to figure out the right lot size you use. Then you come here, you put in your point or your target in pips. Okay, let's say, yeah, you know we are targeting 59 pips there. So you want to know the amount you are going to be getting with 59 pips, or that is with 59 pips. Okay, so you are going to be making about $8, okay, on this trade if you are using 0.14 lot size. Okay, if that's permitted on VS10. Now you see the reason why you need a profile. Can you imagine you are wasting pips? You are wasting pips, 59 pips, and you're just making $8 because you have $100 account and you want to follow proper risk management. And you need to understand something. With small accounts, you don't follow proper risk management. Are you with me? So you cannot be doing this with $10. You cannot be doing this with $50. You cannot be doing this with $100. It is not possible. It's not going to work. There's no way you have $100 account and you are risking 2% or 1% of your account. How on earth do you want to make money? How on earth do you want to flip that account? It's not going to be possible. So if you are trading small accounts, forget about risk. All these things I'm talking about is not for $100 accounts. It's not for $50 account. It's not for $10 account. You don't even need to try it on $10 account. Okay, so make sure you are using the right account. So if you don't have such an account, risk high, you don't stick to 2%. If you have like anything from $100 down, make sure you are risking 5% up. I don't say you should risk 50% of your account once or 100% of your account, but make sure that your risk is from 5 to 10%. If you have anything $100 account down, 5 to 10%, even with that risk, you still have options and opportunities to flip that account. But if you are risking 1% in a $10 account, 1% in $50 account, it's going to be difficult for you to grow. That is the reason why I think the best thing as a beginner is to start with a pro firm. If you don't have that money to practice those things, for you to practice proper risk management, you need to have a good account, a big account. Okay, so you can start with a pro firm or you use your account, but make sure your account is something manageable, is something you can actually apply proper risk management, or you increase your risk. Okay, if you want to make money, I'm telling you the truth. There's no need of telling you to risk 1%, 2% when you just have $10 account or $20 account. It's not going to work. All right, so do you have any question on this? Because we are running out of time. Any question? You can use your mic. You can okay, go ahead.
Okay, boss. Thank you very, very much. I mean, this has been really, really insightful, because the issue of this management thing, it's a major one. It's a major. I pray that God will really help me in the issue of discipline to follow these things. Yeah, so I think I'm gonna really try working on all those going forward. What I would want to confirm now is, look, using the example of that VIX 10, if we take that trade at the fair value gap or any other trades, when we're entering at the fair value gap, it's not very close to the very end of the trade. That's where we usually place our stop loss. So in this case now, yes, do we still place, if we enter the trade at this fair value gap, do we still place the stop loss at this usual place? And then now, considering the account size and this risk management that we are looking at.
Yeah, as long as this strategy is concerned, fair value gap is an entry, other block is an entry. So you cannot enter a trade at fair value gap and you set your stop loss at this point. You are not giving yourself opportunity to make money, because at the end of the day, the price might fill up this gap, okay, correct this gap, and decided to move up to your order block, that might be the place, or mitigate the order block before dropping. So if your stop loss is at your order block, you are not giving the price opportunity to do a thing. You are actually restricting the price, trying to stop the price, and you can't stop the price. So in order to give yourself opportunity, make sure that your stop loss is outside, away from your order block. So if you are losing money, you know that okay, this particular setup is a losing setup. This particular setup hits my stop loss. You don't want to enter a trade and at the end of the day you set your stop loss above your fair value gap. The price triggered or mitigated your order block, at the same time hits you out there and reverses and go in your favor. It's going to be painful. So if you use fair value gap, okay, and you discover that okay, let's say that the fair value gap is down here. Okay, let's just do this. Let's say that the fair value gap is down here. Okay, now your entry should be, first entry might be fair value gap. Okay, then and your second entry or your major entry is going to be your order block, and this is supposed to be your stop loss level. You can see that you have expanded. Look at the TP level here. Okay, so the TP is here, the entry at fair value gap is here, and your stop loss is above here. Can you see that you are this is 1:1 point something? You are not taking this trade. You can never take this trade on fair value gap using what I'm teaching you. You should know this already, because the risk reward is not good already. You shouldn't be entering a trade and you are not making at least 1:2. I said at least 1:2, but most of the setup is giving you 1:3, 1:4 and all that, but at least 1:2. So once you see this and this is fair value gap, and you know the price is already at your fair value gap, you can't enter the trade, because the risk management is already telling you okay, if you want to manage your risk properly, you shouldn't be entering a trade that will give you 1:1. So this fair value gap is invalid for me for this strategy. The price can tap it and reverse it to the downside, it's fine. Like what happened, let's say it's here and the price did that, it's fine. That's not your problem. You wait for the next setup. But if the fair value gap is close to your order block, okay, and you know that if you enter there, you are still safe with your risk. You are still safe. You are not risking high. You still have at least 1:2 risk reward. Okay, you make your entry. The only time you avoid taking a trade on fair value gap is when the fair value gap is making you, or a kind of trying to expand your risk or increase your risk. You shouldn't allow anything to increase your risk for you. You should be the one to determine the amount of money you are risking on this trade, right? So the market condition shouldn't put you off balance. You make sure that you are the one taking the decision, not the price taking decisions for you. The price will just act, show you things, play out the way the chart wanted to play out. You react to whatever the chart is doing. You react to the chart. You don't allow the chart to force you to place a trade. So that's why if you understand risk management, you won't be making a lot of mistakes. All right, so I don't know whether I answered your question.
Yes, please. So well, thank you so much. And then in the aspect of trying to practice or work on this risk management, maybe for those that might not be able to get prop firm immediately, I want to suggest that Funded Next, they have this competition
Okay, yeah,
that they
challenge,
run
right?
every month. Yes,
Someone told me
and
about that, but I just feel like yeah, it's good for you guys. I think if you cannot get a proof what he's saying, what the man is saying is true, and someone have recommended those, they have told me about them, that I should recommend traders to participate on those things. It's fine. I think that's very good for you to test yourself, even though you might not get the account, because I know how all these things work. So you might not actually get the account, but you're actually testing yourself, your ability, what you can actually do. So possibly if you get the account, I will check that thing. I will check it and see if we can just participate. Okay, but we are participating not because we want the account. If you actually want an account, please save up money and buy one. Okay, those challenge, see, is some of them are for marketing purposes. Some of them are I don't just believe that they are, most of them are like are open and straightforward, like sincere. They will actually want to give you an account when you pass the challenge, and it like when you win the challenge. Okay, so I feel like it's going to be taking a lot of time. So the best thing is save up money, purchase, even if the account you are going to be purchasing is the smallest account, but it won't stop us from taking it. Okay, so you guys can, anybody can, Emmanuel, you can make research about that, give us details in the group, then the details of the challenge, how those things go works, then you can actually drop the link, everybody will register and just do it. Let's do it for 1 week or something like that. So but I think I'm suggesting, okay, I'm suggesting save up money and get an account, okay, for yourself. um that's that. Do we have any other question?